Okay. So the question is on accrual and prepayments. Question number 1. Olivie's neighborhood is a business selling health and beauty products. The following is the unadjusted trial balance. Right? So the word used is unadjusted trial balance. So when you say that unadjusted trial balance, it means that later you are given unadjusted trial balance. Okay. So unadjusted trial balance so means that there will be some adjustment that you need to do. So given this information, all right, you are going to do some adjustment. Um, Never mind. Okay, what are there? So the trial balance, remember that trial balance is a list of all the balances of all the accounts. So we have cash, we have accounts receivable. All right, here we have prepaid payment. Remember what is a prepaid payment?
Asset.
It's an asset. It means that you have made payment of your rental expense in advance. So it's an asset to you. And you have inventory, and then here you have the 18-month investment. So 18-month investment is kind of an asset. It means that you put your money into an investment and you have make payment of 30,000 for that. Yeah, so it's an asset to you. You have land, motor vehicle. See, you have the accumulated depreciation. What is this account? What is the category of this account?
It's
Uh,
the expenses.
It's not an expense. Accumulated depreciation. We have a
uh,
motor
Assets,
vehicle.
right?
Again,
Assets, right?
it's a contra asset. Motor vehicle is an asset, but accumulated depreciation is a contra asset. Can you remember that? So you see that motor vehicle is a debit balance, but accumulated depreciation is a credit balance. So it means that, all right, when you first purchase your motor vehicle, the cost is 71,800. But to date, you have provided accumulated depreciation of 35,900. So what's the value? The value would be the net of these two. So the net book value of the asset is no longer 71,000, but will be the net of these two items. Yeah. So this will be shown in your statement of your financial position. You have furniture and then you have accumulated depreciation for your furniture. You have accounts payable, your liability. You have note payable, salaries payable. So all these payable are your liabilities. Share capital, retained earnings, dividend, sales revenue. So this sales revenue is your profit and loss item. Dividend is part of your retained earnings. Cost of goods sold, which is actually part of your profit and loss account. Admin expense, other operating expense, and income tax expense. Yeah, so all these are your will appear in your statement of profit and loss. Anything that you are not clear about the accounts? Right, so you look at the total here, the debit balance and the credit balance are the same, right? So you are on the right track. So now they give you some adjustment, right? So these are the unrecorded, right? So these are unrecorded transactions. So when it's unrecorded, now it is your job, right, to record the transaction in A, B, C, D, E, F, G, right? And you are required to journalize the transaction and then prepare a statement of profit and loss, statement of change in the equity, which is the retained earning, and financial position, right? So this is the common requirement for the transaction. So let's do the first one. So when it's not, it's unrecorded. So now what you do have to do is that you're going to prepare a journal entry, right? So on May 1st, the company goods amounting to 12,000 ringgit had been sold to a regular customer, but payment has not yet been received and no entries have been made. Understand? You
I'm
make
not understanding.
sales. but you have not received cash. Payment will be received in the future. So let me call your names. Let's start with Hakimi.
Yes, in this case, the goods will be deducted by 12,000, and 12,000 should be credited in the account receivables.
I would say that is not correct.
The company goods amount have been sold. That means we sold 12,000 goods.
Okay.
Yeah. And the regular customer, the payment has not been received. 20. Okay. That means the goods are still in the in the stock or not. In this case, I'm not sure how to do. But I guess
No, it's saying that it's sold. It's sold already.
if sold, that means 12,000 will be deducted, means credited from the goods, and 12,000 should be debited in the receivables.
All right. So what will be your entry again? Debit your
Debit my receivables and credit the goods.
goods. What do you have? Goods accounts.
Company goods amounting to has been sold. Yeah.
So the 12,000, is
Yeah.
that the cost of the goods or is that the sales value of the goods?
Okay, that's the sales.
Ah. So, remember just now I talked about your owner's equity, revenue, expenditure, anything to do with that?
Oh, so okay. In this case, the revenue will be 12,000 and the receivables will be also credited by 12,000.
Okay, now you tell me again.
No.
Journal entry, debit, credit, what account?
The revenue will be unearned revenue by 12,000
Why is it unearned?
because it has not been paid yet.
But have you made the sales?
Yeah, we made the sales.
So why is it unearned? What does it mean by unearned?
Unearned means we
Have
have
you
not.
earned the revenue now?
Yeah, okay. The revenue will be credited by 12,000 because revenue is already part of owner equity.
Okay. Debit your account receivable.
Yeah, and debit your account receivables. Yes.
All right. So for question A, right, you have made sales of
Sales.
12,000.
Oh yeah, or revenue
But it says that,
12,000.
yeah.
12,000
Okay,
should be
Hakimi.
credited.
I will explain this. Okay, Hakimi, thank you. So there's a sales of 12,000, and this is what we call revenue to the company. Right? So is the revenue earned? Yes, it's earned because you have sold to the customer. The difference is that now you have not received the payment, so they are going to receive that later. No entries have been made, so that's why you're going to record this transaction. So how to record this transaction? Number one is that you're going to debit your accounts receivable, 12,000, and credit your revenue. In this case, credit revenue, while revenue is your honest equity, increase in your revenue. So you debit your account receivable, credit your revenue account, amounting 12,000. Is that straightforward? Yeah, because why? Because it's just that goods sold and then you have not received. So it's just account receivable and your revenue. Everyone clear? So that would be your first entry. The second entry, yes.
Could you please repeat again?
Sorry?
Could you please repeat again the 12,000?
Debit your accounts receivable, credit your revenue. Yeah. Okay. So the first one is that debit your accounts receivable, credit your sales revenue. One is accounts receivable. Okay. So let's look at the second one. The second one is that 80% of the salaries payable has been paid. So how are you going to record that? Let's have Johan. 80% of the salaries payable has been paid. So now it means that now remember that this one is unrecorded. So now you have to record the transaction and it says that 80% of your salaries payable. So how are you going to look at how much your salaries payable?
Wages.
Salaries payable.
You got salaries.
Look into your trial balance and look for
Salaries payable.
payable. So how much you have? You have 16,800. So now it says that 80% of your salaries payable has been paid. So what would be your journal entries for this transaction when you make payment of salaries 80% of the payable?
So 80% from the 16,000. What is now? 16,800
Okay.
is a cash.
Yeah.
So you credit cash. You. Oh yes.
Good. Debit.
Debit payable.
Debit your salaries payable.
Payable.
Why you debit your salaries payable?
You repay.
Because you reduces your
Yeah,
salary
reduce, yes,
payable.
yes.
Yeah, salary payable is liability. Now your liability reduces because you make payment on that. So how much you debit? 13,440, which is the 80% of 16,800. So again, what would be the double entries?
Credit cash.
Mm-hmm.
80%. Credit cash and debit account. Salaries payable.
Yeah, debit salaries payable. Right, and then credit your cash of 13,440, and this is actually 80% of the salaries payable. Very good. Next is Hidayat. Number C. The note payable issued on 1st August with 4% interest. Interest on the note is accrued at year end. So what happened here is that, so this one is more challenging, yeah, Hidayat. So let's say, all right, it says that August, hold on, let me explain first. Because I think that I have not covered this just now. So you have issued on 1st August 2019. So you just double check, this one is 31st of December 2019. So if you issued in August, how many months are there until December? You have
5.
August,
5.
September, October, November, December. 5 months, right? But now you're going to record the interest for the 5 months period. But the interest is 4%. So when you see the term 4% interest, it always shows that it's 4% per annum. What do you mean by per annum? Is the 4% annual, right? Per annum is annually, means that you are going to compute what is the interest for the 5-month percent, assuming that the interest rate is 4%, right? It's accrued at year end. So now it means that you're going to recognize how much is the interest for the 5 months period. Would you like to compute that first? How are you going to know how much is the note payable?
We calculate first the note payable with the.
So where's your note payable information? is in your trial balance. Whereas your note payable is the 36,000. Okay, 36,000 is your note payable. You compute for 5 months at 4% per annum. Anyone?
The 4% divided by 12. The 4% divided by 12 first, and then times 5, right?
Yeah, try lah.
Hold on.
$6,000, I guess.
6,000.
Yes.
Are you sure?
Inshallah.
Your investment is 36,000 note payable.
Yes.
And my note payable is 36,000. 4% interest is 6,000. Does that make sense? And then 4% is per annum.
No, that will be incorrect. 36,000.
I think 1,440.
36,000.
Just now, not payable is how much?
36,000 note payable.
36,000 زائد 0.0 شهر
No, 1,440.
مثلا زائد 5 equal to it's 600.
Yeah, it's 600. Careful, it's not 6,000. So
Yeah.
how do you actually get that 600? Right?
Yeah.
Show you here. I think that's
First time I find out how much is the total interest of per annum of 36,000. Then when I get the total, then I divide it by 12. Then again I multiply by 5, it was 600.
Let me show you. How much is your note? Is RM 36,000.
Yes.
Okay, times by, remember, it's 4% per annum. Yeah, 4%. But you only want to compute for 5 over 12 months. Right? So it's not 5 months. 4% is per annum. So it means that you want to compute for 5 months only. So 5 over 12. The other way you can also do it like this, command C, command V. So instead of 4, no, don't do that. Right, it's this like this. Just do this. Right, 4%, but it's for 5 months period, but that 5 months divided by 12. So that's how you compute 600. Right? So
Yes.
0.04, remember 4% is 4 over 100 or equals to 0.004. Times by 36,000 times by 5 over 12. That's how you get 600. So this finance cost, sometimes we call it as your interest expense. Yeah, so you can have it as interest expense as well. And then credit. So why is the interest payable is credited? Because you do not pay the interest yet. You pay note payable. So when you issue note payable, you're going to pay the interest later. Right, when you make payment of the note payable, so together with the interest. So because of that, you're going to pay that interest later, is going to be payable. So that's why your entry will be debit your finance cost, or in this case, you have your, why do you call it as a finance cost? Any interest is for the financing of the business, right? The note payable is to finance the business, that's why it's called finance cost. Or in other words, right, we call it as an interest expense. Right? I can accept interest expense as well. Is that clear? Right? You debit your interest expense. This is expense. That's why it's debit. Right? And credit your payable because you're going to pay that later. Right? Any question? Okay. Next is, let's have Alia. 1,500 interest income on 18-month investment account is accrued at year end. So what it means is that now, remember that just now I mentioned that you have this investment. So when you have investment, you then generate income. We call it as an investment income. Yeah, so in this case, it's given that the interest income is 1,500, right? So accrued at year end, it means that have you received it or not? When you say accrued at year end.
Not yet receive it.
You not receive, right? But you are going to receive that later. So what would be your adjustment, Alia?
So it's debit interest receivable
Very good.
and credit interest income of 1,500.
Very good. So my question is, why you debit your interest receivable?
Because we will receive the money.
Yeah, it's an asset to you,
It's an asset.
right? So the interest receivable is an asset. So that's why you debit your interest receivable. What about your interest income? Why you credit?
Because it's our liability.
Huh? Interest
Sorry?
income is a liability?
No, it's honest equity.
Yeah, it's income. Yeah,
Yeah,
anything
yeah.
income
Sorry.
or revenue that increase your honest equity, that's why you credit.
Credit,
So the
yeah.
entry would be debit your interest receivable, credit your interest
Interest income.
income. Kenapa tak ada? Mana interest receivable hilang? Okay, right? Interest receivable and interest income. Next is honey. The prepaid rent refers to an advance payment of 6 months rental that the company paid on November 1st, 2019. The company charges rental costs incurred as admin expenses. So what it means is that, remember that this one is as of December 2019, right? You make payment of your rental for 6 months period. Okay, so you have a prepaid rental for 6 months period, but that was paid in November 1st, 2019. So your year end is 31st December, so you have 2 months, November and December. Careful with the year period. 1st November and then 1 whole month November and then you have another month of December. So the months that you have to recognize the rental expense is 2 months. Right, and these charges is what it means by the company charges rental income cost incurred as admin expense. Means that you're going to open up put it under administrative expense. All right, so what is your prepaid rent? How much is your prepaid rent here? Your prepaid rental, you have a 9,600. Okay, so this 9,600 is for how many months?
6 months.
6 months. So how are you going to recognize? You're going to recognize, or you want to recognize expenditure for your rental for 2 months only. So how do you compute that?
9,600 divided by 6 and then times 2.
Yeah, very good. So that's 3,200.
So for 2 months it's 6,400. Sorry, Ajak.
9,600 times 2 over 6.
Yeah, it's 3,200.
3,200. So what would be your journal entries then?
My journal entries would be prepaid rent credit to 3,200
All right.
and administrative expense debit 3,200.
Very good. All right. Why you credit your prepaid rent?
Because it is because it increased the because it increased the expense. So when the expense increase,
Okay, sorry. What is a prepaid rent?
prepaid rent is asset. Sorry.
Asset. Okay, so
Yeah.
now you credit your prepaid rent.
Yes.
So why you credit your prepaid rent?
Because when it increase, it become a credit because asset is a debit.
Okay, check balik. Check again. Prepaid rent is an asset.
Yes.
So now when you recognize, just now you said that you credit your prepaid rent.
Okay.
So if you credit an asset, what does it mean? Increase or decrease?
Decrease.
So,
Increase.
now,
Decrease.
are you sure or not?
Increase is supposed to be, when it decrease, when it decrease it become credit.
Right. And then you debit your rental.
Yes.
Okay, so what happened is that, all right, let me show you the answer first.
Okay.
Right, so you debit your admin expense. So admin expense here actually refers to your rental expense. But because they say that they create that rental expense is actually put under administration expenditure, that's why you put that under admin expenditure. So debit 3,200. How do you get 3,200? RM 9,600 times by 2/6 months. Right? So what happened is that you make a payment of 6 months rental in advance. How much you make payment? 9,600. You make the payment on 1st of November. So when you have 1st of November, then you created your prepaid rental at that time, right? 9,600. But when you come to December, you have to recognize your rental for November and December. So that's how you get the 2 months, right? So how much is the 2 months? So 2 months over 6 times by 9,600, that's how you get 3,200. And this 3,200 is for November and December. Prepaid rent, remember, is an asset. So when you reduce, means that when it comes to December, initially you have 9,600, but now you already have expires 2 months rental. So the rental that you have left is now the prepaid expense is no longer 9,600, will be less by 3,200.
Yes.
Why you debit, of course, is an expenditure because now you recognize the rental expenditure. Okay.
Okay.
And then, all right, the company owns a piece of land bought in 2000. The land is revalued. So when you have a revaluation, it's a different, right? We have a depreciation, so it means that the value depreciates over time. But because land appreciate in value, and then below you appreciate in value, you have to revalue the land, right? So let's look at the land just now. How much land do you have in your account? You have 93,600, right? But now it's revalued. How much? Revalued to 150,000. Okay, my question is, let's have Nurhani. How much is the revaluation? How much is the increase? 150,000. Initially, it was 93,600. 150,000, look at the changes, minus 93,600. So it means that it has been revalued, or there's an increase by 56,400. Are you clear about that? Revaluation?
Yes.
Right?
Yes.
So it means that it increased by 56,400. So how are you going to reflect this? So it means that when you revalue your land, how is it supposed to appear in your SOP then? The land now, how much is the value of the land now?
The value of the land now is 150,000.
100. So it means that now you have 93.6, but when you do adjustment, the land now should be 150,000.
Yes.
So how is that reflected? How can you make your land to be 150,000? What would be your journal entry so that your balance of the land become 150,000?
Debit.
Is it land debit 56,400,
Okay.
and then land revalued is credit 56,400.
Okay. So if you want to do that, I think that the name of the accounts is something ARR,
Oh,
reserve.
yeah.
Ini apa ni? Ini kat sini ya. Tak keluar. Ya. Right. So I think that because I have common X. Okay. So land, you debit 56,400, record as a revaluation reserve, right? Or we call it as ARR, asset revaluation reserve, right? So it's part of your honest equity. So my question is that when you revalue your asset, do you think that is the honest equity increases or decreases in this case?
Increases.
Increases. Why? Because the land revalue upwards, right?
Yes.
So when you revalue upwards means that the honest equity also goes upwards. So that's why it's a credit, right? So the land you debit because the value of the land now increases by 56,400. Yeah. And finally, we have annual depreciation charge for motor vehicle and furniture are 71,780, 1940 respectively. Depreciation for 2019 has not been recorded. So what happened is that now we have a depreciation, right? But these are for two assets, which is one is for motor vehicle and the other one is for the furniture, right? So there will be four journal entries actually, two sets of journal entries. You have to show it separately. So let's have Numan to try on this, how you're going to record your depreciation. Journal entries for depreciation.
Is it cheaper? Annual depreciation charge for motor vehicle?
Yes.
It will be on the credit side 7,180
Mm-hmm.
and then 1940 respectively.
Okay, so how is your debit and credit?
Ma'am, it will be 1 second.
How is this reflected in your accounts?
Ma'am, it will be reflected as on the credit side, both of these 7,000 and 1940.
Okay. That does not, if you answer like that, I cannot give marks for you.
Okay. You mean
What is debited? Which account to be debited?
1 second? I will apply first question.
When you have depreciation, there are two accounts. Tell me what are the two accounts? One is an expense, the other one is a contra asset account.
Yes, ma'am. But
What is the name of the account?
it is from the contra asset accounts, both.
Slowly,
Motor
slowly, I can't get you. You slowly talk.
Ma'am, first one is from the 7,000 contra account. It's from contra assets account, annual depreciation charge for motor vehicle.
One more time. The first one is, what is the name of the account?
Contra account assist, which was discussed today.
What is the expense account?
This motor for furniture.
No, furniture is an asset. I want an expense account.
My expense.
No, you cannot have furniture as your expense.
No,
Furniture is your asset.
furniture is asset. I know, ma'am.
So,
My annual depreciation for a motor vehicle. I mean.
that's right. The depreciation for your motor
Is
vehicle.
an expense. Yes, ma'am.
Depreciation for motor vehicle 7180 debit. Then you credit.
1940.
No, 1940 is another
Asset,
depreciation.
furniture asset, yes, ma'am.
So, for motor vehicle, the other account is?
1 second, I will see the question first.
The other is accumulated depreciation.
Okay. Accumulated depreciation.
Right. Where is this? Right. Why is it operating expenditure here?
Here.
Hold on now. Let me see. All right, accumulated depreciation. In this case, for the motor vehicle, you don't have other, they put it as, it's okay. You can put it as other, as your depreciation like this, right? If I were, I can put the depreciation for motor vehicle, and you have the accumulated depreciation for your motor vehicle, 7180, and then you do another one, right? Another one is accumulated depreciation, but this one is not for, this one is for furniture, right? And then accumulated depreciation for the furniture. How much is it? 1940. So it should be 1940, and here is 1940. Okay. Yeah?
Doctor,
Yes.
so this means that depreciation furniture is a new account.
Again, depreciation furniture?
Depreciation furniture and depreciation motor vehicle is a new account.
Yeah. But here, all right, I was looking because the answer put it under operating expenditure. So they put it is here under operating expense, right? But it could be under operating, because in this case, the expenditure are put under admin expense and other operating expense. Okay, you can have it under operating expenditure, or you can have a depreciation. As a start, I can put it under depreciation itself. So I want to show you that, okay, this is your account that you have to open up. Is that okay?
So this one will be under expenses, right?
Yes. It
Okay.
is an expense.
Okay.
Right? Here, initially the answer should be under other operating expenditure. But if I were to put other operating expenditure, for example here, right? Other operating expenditure, right? So I put it as a depreciation. You want to see it like that, can also, right? So that is clearer. Okay. So what happened now is that you have all these journal entries. Then you are required to prepare financial statements, right? So let's start with the statement of profit and loss. So what I want you to do now is that instead of you draw it like that, right? So what you do is that let's start with the journal entries, the initial one, right? So I want you to prepare all these in the respective statement. Remember? All right, you prepare your profit and loss account, statement of financial, statement of profit and loss, statement of retained earnings, and statement of financial position. Okay, so we are going to put all these items into the respective accounts. Right? So if you look at the answer here, all right, you put the name of the company, name of the statement, and then for the year ended 31st December, we'll have one tick each, right? So you're given ticks for that. Okay, how do I want to do this? Yeah, I want to show you that. How do I want to show you this? Huh? Okay, let me do this like this. Right, you see this accounts? What is the time now? 8:49. You prepare the three statements. Okay. Prepare number one, profit and loss. You put revenue and expenditure. Leave spaces in between, because you want to plug in the information from the trial balance. Right. So you want to prepare a sketch of your statements. So profit and loss, you have your revenue and expenditure. So what I'm saying is that, okay, let me do it like this. Right? So let's do it like this. I will put a short form, yeah? Statement of profit and loss. So Okay, I have to show you for the year ended 31st December 2019. Okay, SOPL. So what is under your SOPL? It's a revenue, and then you have the expenditure, right? You can leave some space in between. Okay, then from your revenue, let's prepare your SAW. What is SAW?
Return earning.
Yes, the 31st December 2019. Right, so I just put SAW like that. So let's make it, I don't know, that is okay. All right, after SAW, you prepare SAW. What is SAW? Statement of financial position. So you will have your assets, and then
Liabilities.
liabilities. You want to
Oh,
put
no.
it like this: liabilities
On equity.
and honest equity. So you just do a rough, what do you call this? A framework. Is it a frame or what do you call this? I do not know what it is. So I will just prepare like this, right? So it means that I will prepare my statement, so I should know that what should be in the statement. What is this? Right? I prepare it like that. So I have my, where's my, apa tadi sopel? Apa sopel kat sini? Right? I have my sopel, I have my saw, and I have my saw. Okay? I must know what should be in the respective accounts. Okay, let's see. So what I have is that, or I will copy paste this information, Command C. I will copy paste it here so that I can see it clearly. Right? Command V. Oh. Yeah. Okay. All right. So when I say here like this, right? So when I have my frame on the side, then I will put in this information into my statement of financial position, profit and loss, where it belongs. You get that? So for example, cash, where should it be? Cash will be under my asset here. Right? Do you get that? Accounts receivable, it should be under my asset. Okay? Do you get what I'm doing now? What I'm doing now is that I am transferring this information into the statement because why? I want to answer this part. Prepare your statement of profit and loss, statement of changes in equity, and statement of financial position. So that's why I'm doing the statements now.
This,
You get that?
Doctor,
Yes.
this nothing to do with the adjustment just now.
Not yet. Not yet. Because you have
Oh,
not yet.
because
I have not
because
put
what,
in the
before this
adjustment
we
yet.
because before this we take from the the ledger, right?
Yes. But that's why I want to show you how to do this question.
Okay.
Right? So
Okay.
you plug in the information to the respective statements. So for example, here I have prepaid rent, I have inventory, investment, land, motor vehicle, all these. All
All
right?
asset.
All is the asset. So I plug in this information into my
Asset.
tak apa, tak dulu. Command V. Right? So now I have to put my liabilities. So why is my liabilities? My liabilities start from accounts payable, 12-month note, salary. Command C. We put in command V here. And then my share capital, my retained earnings, all these. Command C. Here. This is my honest. Of course, you have to type but right, I'm just showing you how to do this, yeah? Just command V. What else? I have, okay, where does this sales revenue goes to? Anyone?
Profit and loss.
Profit and loss. So I just put it here. Right, I have sales revenue. I just, right, I move a bit. This line. So now you have transferred everything right into the statement. Hold on, I have the retained earnings here. Right, retained earnings. Command C, command B. Right, so you start with the retained earning. The balance is 24,110. Do you get that? Okay, now what you do is that, remember that just now you have the transfer, okay? So once you have transferred the original, right? This one is the unadjusted. So these are the unadjusted trial balance and put into the financial statements. But what you want to do now, you want to put in the adjustment. So where do you get your adjustment from? Entries for your adjustment. Anyone?
Late.
From? It has to be from your part A,
Journal.
general transaction. So you go back to your journal entries, right? I make it. Right? I will just give some areas here to show you how it's going to be. All right? Whatever that you have done in your journal entries just now, you have done this, right? You have done all this. You just want to take that. All right? Let's take this. Command C. So you have the information, you want to plug in the information. Okay, so let's start with, I just paste it here. Command B. Okay. Of course, in your exam, you don't plug in here and there, but you already have this answer in part A, isn't it? So what you do now is that, whatever that you have here, so now let's look at accounts receivable. This is your adjustment. So now we want to put in the adjustment. So you have account receivable, you debit 12,000, 12,000. So what you do is that you're going to add this information into your statements. So where's your accounts receivable? Your account receivable is your asset here, right? So now what you do, you have the 12,000 here. You add another 12,000. Sales revenue, you add another 12,000. So sales revenue, you add another 12,000. You get that? And then salaries payable, you have 13,440. Do you have any salaries payable? You have salaries payable, 16,008. But salaries payable here, you debit. Remember, it's a liability, right? So it's a liability. So when you debit, it means that plus or minus? When you debit your liability, plus or minus?
Minus.
Minus. So you look for the salaries payable. How much is it? 13,440. So you have a liability here, salary payable minus. So you have a minus 13,400. Put it like that. Correct? Okay. Next is you are going to cash credit 13,440 plus or minus your cash?
Minus.
Minus. So I will put minus 13,440 like that. Okay, so I want you to do this in your exam, yeah? It saves a lot of time. Okay, next we go to salaries payable, done. Finance cost, interest expense. So finance cost 600 plus or minus in your expense? Debit here. What is your finance cost? You don't have that, so you put in your finance cost. You don't have it initially, but now you have 600. And then you have interest payable. It's a liability. You don't have it here, so that's why I say that you you leave some space in between so that you can add in information. So now you have interest payable of 600. Right? Why is not minus? Because it's an addition. It's a credit then. Yeah, so it's a liability. That's why you add in more liabilities there. Then you have interest receivable 1,005, credit your interest income. So you look at your soft interest receivable, you don't have it here, you just add in. If you don't have the income, you add in interest receivable. It's an asset, right? How much is it? 1,500. 1,500. Right? And then you have interest income. So remember that interest income is part of revenue. So you add in interest income. So that's why it's very important for you to know what is the type of account that you are creating so that you know where it would appear, right? So interest income, now I have 1,500. What else? Interest receivable, interest income. I have admin expenditure, additional 3,002, and then prepaid rent minus 3,002. Where's admin expenditure? So I have another 3,200 to be added on the admin expenditure. Here. Sorry. Here. It's in the addition, yeah. So this one is the adjustment. Right, if you want to be very clear about that. Admin and credit my prepaid rent 3,200. So plus or minus under my prepaid prepaid rent.
Minus.
Minus. I'm reducing my asset 3,200. So you plug in the information further. Land increase 56,500, 56,400. Land you add 56,400. And then what else? ARR. So ARR is, okay, this one is new, yeah. ARR is part of your retained earnings. So where's your song? Put in here. ARR will be how much? ARR is 56,400. Okay. And then operating expenditure, you have a depreciation. Operating expenditure, you have minus. You add some more, yeah. Operating expenditure 7,180, and then you have another one. How much is it? 1,940. Okay. Any more? None. So that is all your adjustment, right? You put in all this adjustment into the statements. So what you're required to do, remember, so actually you already have the statements there, but you just want to add in your adjustment entries. So what you want to know now is what would be the adjusted figures. Okay, what would be the adjusted figures? Adjusted figures would be the original, right, plus the adjustment. So if I were to have it here, right, that would be my new figure. Initially, my sales revenue is 74,700, but now I add another 12,000. So now my adjusted revenue is 86,700.
Doctor, sorry.
Yeah.
Just now depreciation where you put?
Depreciation is 2 here. Here. Mana? Sorry. Depreciation ada accumulated depreciation. Sorry, is that
Yes.
class? Sorry. So accumulated depreciation for your furniture, how much is it? 19. You have another 1940. And for your motor vehicle, you have 7180 accumulated, yeah. So reflect that in the accumulated in your financial position here, right? You have your accumulated depreciation for motor vehicle, you add another 7180, and for your furniture, you add another 1940. Okay. So now you want to get the latest, the adjusted. So whatever you have, you add together, right? So for example, here, right? I will add this. So now I have a total revenue of, never mind, right? 88,200. How did I get to 88,200 is the sales revenue, the adjusted figure plus the interest revenue that I just add in. So now I have a new income. But my expenditure, I have to add one more, right? So that's why I say that you have to leave some blanks. Right? My expenditure would be the, for example, cost of goods sold, there's no change. But admin expense, there's an increase of 3,002. Other operating expense increase. This one is your depreciation, right? And income tax, no change, but I have a new finance cost here. So what I do is that I'm going to take what is the new total. Total is the all that, no change here, but my admin expense now increase, right? Similarly with all others. So means that this 18,700 is actually 15 plus 3.2. Right, this other operating initially was 9,000, then I plus 71801940. That's how I get 18,170. Income tax is 500 and finance cost is 600. Right? So what is my total expenditure? If I were to compute that, all right, my total expenditure now is 65420. Right? That is my total expenditure. But is it a positive? Is it a profit? How do you get your profit? Your revenue minus your expenditure. So this is your profit. Right? So where would this figure goes to? The profit.
So,
So you put in your profit. Right? You just get that figure, 2780. Okay? No other adjustment. So it means that you're going to add all this together. So that will be the new return earnings. All right. So this one is the RE brought forward. So this one is actually from your initial. Yeah. Initially from your trial balance. Then you have the revaluation and then you add in profit. So that is the new 103290. So similarly for cash, all right, for your statement of financial position, this is the original from your trial balance. So these are the additional information from your journal entries. So let's get the adjusted figure, right? So because I'm using Excel, it's easier for me, right? I will just drag this information. Right, so and then for the liabilities, it's also the same. It's also the same for this, but my retained earnings now, all right, it's just that my retained earnings, I will have to put in my new retained earnings, right? So that's the only difference because I have to plug in the figure from here, from the SOR. Okay, let's do this. So what is your asset? In this case, all right, remember that this one is the initial. This one is the adjustment, and this is actually from your journal entries. So you plug in the information. So if it's a minus, that means that 21,000 minus 13,440. That's why now the new adjusted figure, all right, adjusted entries will be 7560. So let's look at the, all right, for the motor vehicle, we have 71,800. All right. For this accumulated depreciation, right, initially it was 35,900, now 71,180. But I want to tell you that remember that accumulated depreciation is a contra asset, so it means that you're going to have a negative here, right? It's a negative. Yeah, because why? It's a contra asset, so it's if asset is a positive, contra asset is a negative. Similarly, for your accumulated depreciation for these, all right, instead of you have a positive, you are going to have a negative, right? 9,700. Okay, so let's just see how much is my total asset. My total asset is sum of all these, right? 271, which is I put it right? So what is my liabilities? My total liability is the same. Initially, it was this one no change, so account payable no change. But my salary payable reduces, but now I have interest payable. Again, so let's look at my total liabilities is 5680. We have command X, command V. All right. Remember that this is honest equity, no change. Right, and then my retained earning now 103, so total honest equity would be 223290. Now I have to check whether my liabilities plus honest equity is the same as my asset. Bismillahirrahmanirrahim. I don't get it correct. Okay, let's see. All right, 279370. So what's the difference? I just want to see why is it not balanced. I have 8040. So when you want to check on this, where it went wrong, salaries, interest, maybe the plus minus item, furniture, interest receivable, where it went wrong. Accounts receivable, prepaid rent. Okay. 8040. Anything from your journals entry? 8040. Anything? What is this? 9120. So it's not that. Okay, let me check the answer. What is the answer? The answer is that profit is profit 22780. How much is your profit? 22780. We got it the same, right? 22780. It's just that the presentation is a bit different. Your retained earnings. Where's your retained earnings? Retained earnings is 120.56. So it should be 215.290. How do I get this? So total here is actually 215.290. Oh, the dividend. Where do you get the dividend from? Is there anything about dividend?
Yes, in the statement,
In the?
in the unedited
Oh, here
trial
ada
balance.
dividend lah, 8,000. Okay, where should be dividend? Sorry, So my should be here dividend 8,000. Before I do this, right? I put in my dividend.
Minus, right?
Yeah, dividend minus. Dividend minus 8,000. 8,000, right? Okay. So now you'll see RE 95290. Look at the difference now. How much is the difference? I have 40. So where is the 40? Where could it be? I think that just now the journal entry something on 40, 1940, 1940. Did I come 1940 is here. The depreciation 1940 is here. Okay, what else? Okay, let's double check with the answer again. All right, I have, it's not the same. So what would be the answer? The answer, the 271330. So the asset 271330. What is my answer? My answer is 271330. So it's here is wrong. So where it went wrong? My liabilities, liability. Where is liability? Liability. Liability 56040 is correct. Retained earning 38,890. 38,890. 38. Okay, retained earning is not the same. Very different. Why? Hold on, let's check retained earnings. 215,290 because they have share capital 120. Revaluation and retained earnings. Retained earning, initially it was 241. Oh, share capital. I think share capital kat mana? Right, I have share capital. Hold on. This is the revaluation. Profit 22780. We get the same. Dividend 215 290. 215. I got it. 215290. Oh, sudah. 271. 271370. Wait, it went wrong. 40. Did I do it wrongly? $60,
We
36.
can,
Anyone?
We can see it.
Sorry?
We can is so too small.
Oh, you cannot see. Sorry. 215290. 271330. 271. 40.
Maybe the liability is different.
Liability. Here liability is, you look at here, the liability, total liability is 56040. 56040 mine is liability. It should be 56040. So where's the 40?
They want 13,400. I don't know. Maybe
13,400 is your salaries payable. Salary, where's your journal? My journal is, where's my journal? Ni apa? Where's my journal? See, my salary is here, 13,440.
yes.
So that's how the typo error will make it wrong, right? So what I have here, it should be 13. That's why it should be minus 13,440.
13,440.
So that's how
Balance.
balance already. Okay. 970. Okay, so this is how, right, you do the question when you have the accruals, right? It's the same when you have, for example, last time when you start with your balance sheet, right, and then I give you some transactions, right? So this is how you do. First, you do the journal entries, number one, and then prepare your financial statements. There are 3 financial statements that you have to prepare. What are those, Numan? What are the 3 financial statements that you have to prepare? Is Numan here? Okay, tak ada. Hakimi.
You have income statement,
Very good. 1.
retained earnings,
Very good.
and financial position.
Very good. Right. So you prepare those 3 statements and put in asset, that in your income statement, revenue, and expenditure. So from the trial balance here, you plug in the information into your financial statements. So make sure that all the items here must appear in your financial statements. Okay? You get that? Once you have transferred all these accounts or the balances into your financial statements, then only you plug in your journal entries. Right? So once you have all this information in your financial statement, then go back to your journal entries and plug in this information. Right? If you do not put in the adjustment, at least you already have your financial statement, the initial ones. Right? So you should have that already, about 70% of the questions you have answered. All right, provided that you put in all the information from the trial balance into the respective trial financial statements. All right, then only you plug in the adjustment from your journal entries and then do the adjustment accordingly. It's just that for your retained earnings, it's a bit different because why? Because you have to start from your retained earning from the trial balance, and then if you have a dividend, you minus your dividend, and then remember you have the asset revaluation reserve. You can put it here, right? And then plus because it's an increase in your reserve and profit, and then you have the new retained earning. So the same figure here appears in your honest equity. Yeah, so that is the adjusted figure for your retained earnings. And in your soft, and remember that once you put in all this adjustment, get the new figure, the adjusted figure. All right, and this adjusted figure should give a total new balances for your asset, liabilities, and honest equity. All right, are you okay?
Okay, doctor. Doctor,
So Doctor,
Yes.
basically, go first.
may I ask you to upload the Excel later in the Google Classroom so that I can
Sure.
pre-check? Yeah, okay.
I
Thank you,
think
doctor.
okay, the one that I have just now, I have not uploaded. Maybe I will upload a new ones, right?
Okay.
Because the one that I've uploaded without the one that I've just written down. Do you want
Okay.
that, or
Uh,
because the one in the one is the one, the answer that is already there, not the one that I type in. Which one do you want?
if possible, the recent one that you have adjusted.
All right.
Okay,
Okay.
thank you, doctor.
Mm-hmm.
Yes, please, doctor, and the recording as well, because I think I still need to watch the video several times.
Okay. I will share that recording. I will close recording now first because we are going to